African Rainbow Minerals' first half headline earnings per share slipped 30% to 654 cents. This due to the fall in iron ore prices coupled with above inflation unit cost increases at some of its operations. Sales revenue came in flat at 8.8 billion rand, and Mike Schmidt, who's the CEO of African Rainbow Minerals, joins our conversation now live from the JSE to unpack these numbers. Thanks so much, Mike, for joining us this morning. Well, let's drill down into these numbers. I've of course gone through the headline figures. Take us through the half year that was for the company.
Alicia, good morning to you and thank you for seeing us. We're very pleased with the output in terms of our production output and our sales volumes. Whilst we can't control commodity prices and we are price takers, we certainly can influence the bottom line by controlling our costs, being prudent with our capital and pushing up our volumes. And I think that's the clear message that we as African Rainbow Minerals have delivered in this period. And what we are seeing is a noticeable improvement in spot prices as we sit, which certainly has a good indication going forward.
Mike, if I could just jump into the conversation here, Samantha joining you from Cape Town. Just looking at the headline earnings coming through from ferrous metals at 1.9 billion rand in the previous reporting period, that contribution dropping by 46%, so nearly 50% down to 1 billion rand. So overall, that of course was the key driver of why we saw earnings falling. It was all around the 28% drop in the US dollar price of iron ore. What does this mean about your intentions when it comes to iron ore going forward? Are you looking to diversify away from iron ore, or are you a little bit more bullish on the medium to longer term outlook for the iron ore price?
We have previously indicated that we need to try and balance that portfolio by diversifying. We have over a number of, historically we have improved our footprint in the platinum space, in the coal space, and in nickel. Those projects are delivering today, and we're very, very pleased with their turnaround and their contribution to the bottom line. That does not mean that we are not bullish on the medium to long-term outlook on iron, and our iron ore operations are now at steady state, and we have an opportunity to increase the production there based on the market demand strategy from Transnet when that emanates and they give us the allocation. So our diversification strategy is paying dividends. Had we been overly dominant on iron ore as historically was, we would have seen a substantially higher drop in earnings other than what we're seeing today.
When it comes to your strategy moving forward, let's take a look at where exactly you're looking to spend, Mike. I mean, you've always had a pretty conservative approach to cash. You've enjoyed very little debt on the balance sheet. Net debt to equity, where's that sitting right now? And are you looking at that staying pretty stable, or are you looking to leverage a bit more off that balance sheet, making big investments?
We believe our financial position is very robust. We are not uncomfortable about leveraging and getting debt to the region of between 20 and 30%. And we're well positioned to take advantage of that. We continually look at opportunities from organic growth opportunities. We're looking within a portfolio of exploration. We continually to look at acquisitive growth opportunities. And when we can get those at the right price, we certainly will consider them.
Mike, Derek, just a question from my side, and really you were talking about commodities and the demand for commodities that you're finding starting to come through. Just on a broader spectrum scenario, are you finding that this is a trend that you're starting to see in the global environment, where you're starting to see strong demand for the commodities that you are supplying and obviously increasing your production? The question really I'm asking, is that production driven by a consistent and an increased demand for those commodities at this point of the cycle?
I believe that's exactly the case, and I think in terms of our strategy, we've considered this over and over again, and we continually challenge our strategy. We are very positive that the commodities we've invested in are growing, are commodities of the future. Some of them are early, some of them are late cycle products. But they will deliver, and they are delivering, and we're seeing that coming to the fore right now.
Mike, it's Robbie here. Firstly, I'd just like to congratulate you guys on very strong performances in your nickel and coal operations. Just with your long-term sort of capex and acquisition spending, would you guys be looking more to do more acquisitions to further enhance your diversification? Or would you guys be looking to return some excess cash to shareholders given your low gearing levels at the moment?
Robbie, I think it's a combination of both. We've got to be very, we need to be very mindful of the fact that we have an obligation to our shareholders and to growing the business. So returning cash to shareholders is an important consideration, but we also need to grow our operations. So I think it's a balancing act, and we are not post-growth. And if the right opportunity knocks on our door and we are looking, we certainly will consider it in our diversified portfolio as it stands now. The only consideration where we are divesting, as we have seen on the results, is that we are moving out of the chrome, ferrochrome market. We believe that's overplayed and oversupplied in the medium term. But we're very bullish on copper. We're very pleased with our copper announcement and that program going forward.
Mike, let's just take a look at the South African environment. Of course, in the financial calendar year in South Africa, Budget Day tomorrow is perhaps the most important day. And of course, one of the key issues at this point in time, which is quite controversial, is issues around taxing the mining sector. We know that on the table there's the minerals resource rent tax. There's a potential export levy that could hit strategic resources as declared around coal right now. Of course, you have a coal aspect. You've also got iron ore. So questions around that. But overall, it seems like government also wanting to increase royalties, take more bottom line from the mining sector. What's your position right now when it comes to all these changes?
We are confident that government will do the right thing. What's very pleasing is that we are, as industry, are engaging government and government engaging us. We have no doubt that things will pan out in the right direction. If I can take you back when the Royalty Act was proclaimed a couple of years ago, it was a big concern. We see 3 years later a moderation of that with no major impact going forward. So I have no doubt that government will do the right thing going forward.